From blowing accounts to understanding the psychology of trading, this is a trader who learned the hard way and came back stronger.
Just yesterday on USDJPY, it dropped like the whole dollar in like 2 minutes. Just trying to make some good picks and then try to keep my emotions out of it. And then you start trading like a real account and you're just like blowing your account, and you don't even have to be right 50% of the time for you to be profitable. Because before that, I was done. I'm like, I don't get it. I need to walk away with some lesson here because all I have to show for it is loss. So if I don't come back and do something different, I'm done.
Okay, cool. So, Stefan, can you tell me how your week has been up until now? Have you been trading or
Oh yeah.
is it a lazy week?
No, it's been productive. So I have been actually involved in a couple of charts. I've been really watching USDJPY and GBPJPY. So those are the things that I'm kind of looking at right now. Uh, I mean, see here, if I look at just yesterday on USDJPY, it dropped like the whole dollar in like 2 minutes. It's like 1,000
Okay.
pips down. Ridiculous. Um, so there's certainly something to be said about, and of course gold is its own topic. You could probably talk an hour just about gold and metals. Um, so it's yeah, we're definitely in a very interesting moment for those pairs, I think. And other than that, just trying to make some good picks and then try to keep my emotions out of it. So,
Yeah, that's always the goal, right? Keep the emotions
right.
out of it.
Yeah.
But I think it's hard. Even not even the market can't keep the emotion out of it. I mean, it also reacts to some certain fake
Yeah.
news,
Yeah. Tweets.
yeah,
Hmm.
tweets, some
Hmm.
agreements that have not been made actually, but were there for
Hmm.
like 15 minutes.
Hmm.
Just so the JPY pairs went the other direction because I was personally looking at gold and Nasdaq, US 30. They were all bullish. They had
Yeah.
like that crazy spike in the other direction, but the
Yep.
JPY pairs
Down. Yeah.
goes the other direction. Okay, so you
Uh-huh.
mainly trade forex, or do you also do metals?
Well, I mean, um, I like participating in gold and silver along with currency. It's just that it when it acts very volatile and you look at the chart and you really don't see any strong indication what movement's going to happen, or you can't even get like a good feel of what overall the general trend is, then it's just better to stay away from it. I mean, there's like certain things. Maybe one day I'll become so good at making a prediction about what's going to happen in these types of situations that I can feel comfortable trading in them. But those experiences are just not in my wheelhouse yet. And so I'm sticking to, currencies, and especially currencies that I find are somewhat isolated or insulated from a lot of the geopolitics that are happening, because that adds an element of uncertainty. And of course, nothing is really, insulated ever, but there's degrees of insulation, and British pound to JPY is, you know, arguably some degree of isolation.
From the current news, yes. So have you been trading for a long time? Like, is this an observation you've made over years, or are you pretty
Um,
recent in the trading sphere?
I'm very recent to foreign exchange, um, like maybe a year, something like that. Um, I am also, in the grand scheme of things, just really a student for trading. I think I got really interested in trading around the time that Wall Street bets became popular on Reddit, and the GameStop pinch. I don't know if you recall that, but there's that huge pinch, and then these large institutional firms were trying to push the stock value of GameStop to zero. They made this like, I forget what they called it, but it was a crazy. And then like all these retail investors like rallied behind it, to try to keep
Okay.
the stock from going to zero. And then it just sent like ripples to popular culture. Like that's how important something that was happening in the stock market was affecting normal, regular people that normally wouldn't care at all. And so it kind of really made me take a look and interest in it. So ever since then, I was kind of interested in trading, and I've made like every single mistake along the way. You know, where you start with like a paper account and you have no idea about, slippage or spreads, and you're like scalping microsecond transactions, and it's completely
Okay.
fake. Like you can't really do those things, but you don't know what you don't know. And then you start trading like a real account and you're just like blowing your account because you have no idea. And so like I did all that, and then I started reading and watching these old school legendary investors. And you know Mark Douglas is a huge inspiration as a old school investor. And I think that of everybody that you can choose to study and read, he's probably the most valuable in today's market, even though he's like 100 years old or something. Not really that old, but he's getting there. He's getting pretty old in the lore. And For me, like when I looked at in trading, I really saw two philosophical camps emerge in my understanding of it. And there's the people that are the fundamentalists. These are the people like Warren Buffett, who believe that you can take a look at a company and you can look at their P&L and their practices, and you can make judgments about something that's going to matter long term. And so you're evaluating value and then finding when those values are on discount, and you're buying it when it's low. That's one. And then you have other people that are, more like Mark Douglas and of that crowd, where like, hey, look, at the end of the day, when you just look at a chart, it really doesn't kind of matter what you're looking at, if you're going to be out of that trade at the end of the day. And what you're really looking at is market sentiment and human psychology playing out in mass in this forum. And if do certain things and take certain positions, then you can make money off it, and the fundamentals don't really matter. And Forex, or foreign exchange, just happens to be one of those instruments or vehicles in which that's really true. I mean, we're not really making evaluations on the Japanese government and the US government and things like that.
Yes.
Not really. What we're
Yeah.
really doing is we're looking at a chart, and even people in the financial community say that in this space is a speculative market, meaning that we're kind of gambling, you know? So, so what then, so what we're really doing is,
We're,
is we're
we're
seeing who's the best gambler,
yeah, we're trying who has the best probabilities on his side or on her side.
Right.
Yeah.
Yeah. And honestly, the crazy thing is that if you're able to divorce a lot of your emotions from it and play out some sort of strategy, chances are your strategy doesn't even have to be good, as long as you have that discipline to pick trade positions and set a certain strategy and execute it flawlessly. And you don't even have to be right 50% of the time for you to be profitable, you know and
But
so
if your
that's
RR is better, then yeah, of course. If you
exactly,
can
yeah.
shoot a
And
little bit
good,
upper 1-to-1, then you don't have
you
to be
if
right as much. Yeah.
yeah, if you have a good risk to reward, you could be right like a third of the time and still make money, if your risk reward is good.
Okay.
Um, but,
So is your
and I think,
strategy also like in that direction? Like, do you do low win rate, high RR, or how does your strategy
no.
usually perform?
So here's the thing about me. I treat every single challenge and funded account like its own vehicle to test its own strategy. So, like for example, right now for my Ola Prime account, it's kind of a special case because it's an old account back when Ola Prime was messing around with consistency rules. which really make you reevaluate like how you trade that, right? And so I'm trying a specific type of strategy, a specific type of risk reward and frequency to see if it works. And Mark Douglas says you need about 20 data points before you can really see whatever statistical edge play out or not, right? So I'm just now getting to the point where I feel like I have enough data on this one to change and try another strategy. But on other accounts, I do a different strategy. There's different rules because thank goodness Hola Prime got rid of that consistency rule, because those things are like the worst. I mean, like, obviously we don't want people to like blow accounts or make huge swings, but 25%, come on. So I'm glad
Yeah.
to see that is improved. So thank you, Ola Prime, for listening to the masses on that one. And
I mean, there is huge variety, right? Because there are so many types of traders. I
oh
I
yeah,
know a lot of traders that only do like 1 to 2 risk to reward, and they actually do pretty fine with consistency rules
yeah.
because they usually have
I
same wins, same losses every day.
I do win
Um,
1 to 2.
yeah.
I do 2 to 1. Yeah. I mean, I usually 2 to 1 is my default amongst all of the strategies I try, because it's really hard to swing for higher risk. Okay, here's my philosophy on it. If you're in the stock market and you have an accurate read of volume, then you can see volume build behind certain levels. Like if there's a line of resistance or a line of support, and you can read the volume coming through the exchange because there's a central exchange and you can see the volume truly, then you can make these huge risk reward positions because you see that volume coming through. You see the buying pressure or the sell pressure, where you know that if you're wrong, you only need to be wrong a little bit, right? Before you know, like, oh, I chose the wrong direction. So you can have like 9 to 1, 8 to 1, 5 to 1 risk rewards. You can do that, right? You can't really do that in foreign exchange because there's no central exchange. There's no accurate rate to read volume over a market that's a global market like this. So, in my opinion, if you do that as a Forex trader, I'm not saying you're wrong. You might be a genius. I just don't know how to do it. And philosophically,
Okay.
I can't convince myself that that makes sense. So, if you know something I don't know, please let me know.
Oh, I'm not going to dive into that. There is a whole other topic because personally, like myself personally, I do really really tight stop losses, and especially at
Yeah.
like very uh, potentially turning points. So with me, it's like 50-50 win rate, but like risk reward up to 5, 6, 8, 12, anything happening. But it's also based on higher time frames. I don't do 1 minute scalps and stuff like that. I usually base it off of 4 hour and then going lower to 1 hour, 15
I
minute
do.
entries.
I do
Do
the
you do
same
that
thing.
as well?
So
Okay.
okay, that in principle, when I'm opening up a chart, first thing I'm doing is I'm switching the candles to like 4 hour candles or even day candles, because I do want to know fundamentally, am I approaching, a historic limit, right? Is like how long has it been since USDJPY ever crossed this line of support or resistance or something like that? Or is there a larger macro trend? And then I start stepping it down with that in mind, knowing that if there is a macro trend or some sort of historical limit, then I get down to about the 15-minute or 5-minute candles. And then I figure out, where is it trading today? Because I want my trade to open and close in the day, right? And then you start choosing like your intraday support, resistance, trading band, and then you pick the direction, and then you set your risk reward, and then you just move on to the next thing and don't watch it, right?
Yeah. Can you do that? Can you actually do that? Can you not watch it? Like, can you just put a trade in and then not look at it at all during the day?
For Forex, and specifically having multiple accounts, is a really good way of doing that, because I can have a couple of Ola Prime accounts and I can set it to like one of the accounts, And I'm like, okay, wait, what strategy am I trying to explore here? Okay, do that, and then great, move on to the next account. Like you really can, and then just check on it. Maybe it gets easier if you're trading in a different way where you just have your one account. It's like impossible to do that. It's your one account, you know?
You're putting all of your cards and all of your hopes in that one account.
Yeah.
Yeah,
Yeah, and
yeah.
you're just watching it. Like that's the cool thing about challenges and multiple accounts, is that you can set a couple of like, delayed entries. What's really interesting is when if you have like a band and the stock or the Forex is trading within a band, right? And then what you do is you'll set like a buy like just above the band, a stop loss and take profit, and then you set a sell just below the band, right? And you're just like, okay,
Okay,
whatever. When it breaks, you're just like,
okay.
when it breaks, I'm playing both sides, and you walk away, And what's really cool is if you can get it, if it breaks below, and then you hit a profit, and then it comes back up, and then you buy, and then you're like, woo, I double dipped on that one.
Yeah, we usually call that one ping pong because you do it one direction, other direction, one direction until it stops you out the
That's
fourth
like a
or the fifth
unicorn,
time.
right? If you
Yeah,
can get that to happen.
yeah. That's I did that a couple of times with gold. Worked out fine until it didn't. I mean, now you can't do anything good
No.
with gold.
Yeah.
So it's a bit hard to trade it, especially if you're focused on metals or in indices. I mean, if you do minor pairs, like anything not without the US dollar right now, then you're on the safer side of things.
Now,
Um,
now,
now,
yeah.
at this stage, yeah.
Do you have so I have some theories about gold, right? Do you have any strong opinions? I'm curious, like, do you have a strong opinion, sound blurb? Like, what do you say to people when people ask you, wow, gold is crazy. Like, what do you think about what's happening with gold right now? Do you have anything in your back pocket?
It's like I don't know if you remember in January, I think, or late December, and then the whole month of January, it was like spiking up and up because of war news and whatever. And then
Yeah,
when the attack in Iran happened, then everybody was expecting it to blow up again in like one day, and everybody was buying, and then it
wrong.
didn't really happen like that. So
Right.
that's the thing I was thinking the whole time as well. So I was thinking like now the market is at a place where everybody thinks it's going to go up. So everybody is probably going to become liquidity for the market. So
Hmm.
I don't know. It's super volatile right now. I usually traded gold on 4 hour time frames
Mm.
and expecting some kind of ranges on the 4 hour time frame, but now you don't really have a range. I remember last year we would say gold is acting crazy. It's doing like $20 in 15 minutes and stuff, and now it does 100 in 5 minutes, and we're not even surprised anymore. So it's hard to trade gold at this time.
I'm pulling up gold in another chart right now, just so I can take a look at it. Yeah, it's absolutely wild. Um,
Yeah.
I heard an interesting commentary about gold, and I don't know you know how true it is. Obviously, it's just something I heard. But people often like gold because they know that there's a lot of stability in this this currency or this metal. It has stability, but two things kind of worked against it. I feel like at the beginning of the year, and one thing is that once crude oil becomes threatened and crude oil is pinned to the US dollar, that that oil prices rising could have or does have historically a relationship with inflation, right? Because of the fact that oil is pinned to the US dollar. And when people become concerned about inflation, then people worry about where they're storing their money to survive inflationary times. And gold is, a great thing in itself, but if you put too much of your portfolio in gold, then it's going to depreciate in an inflating, economy, essentially. What you have to have is to put it somewhere where it's going to make some sort of yield or some return on investment. And I think that people became a little too scared about, their currency and went to gold, and then they realized, wait a minute, I need a way to make my investment passively, appreciate in an inflationary economy. And then that's where we see this correction back away from gold a little bit.
Okay. You gave yourself one more chance, or did you
No,
take a break? Did you jump to
I
Forex
took a
then?
break.
Like, what was the
I took a
transition? Okay.
I took a break and I asked myself, what did I learn? And I really I learned a lesson because it wasn't clear to me at first what my lesson was. I knew that this kept happening, so I had to stop and I had to think about it over time so that I could say, okay, this is what I learned from it after looking at those losses and kind of rolling it around my head for a while. Was okay, I have a lesson now. I think I know something more than I knew before. Now I can go back to trying to trade again. Because without that, then I was just going to make the same mistake again and again and again. And I already paid for that mistake a couple of times, and I didn't want to pay anymore for that particular mistake.
That's
I'll pay more for a
that's a
different
really good
mistake,
realization.
please.
Yeah. No, but you have to be we're coming back to humility all the way around, because you have to be
Yeah.
humble to accept that you're wrong. And
Yeah.
many traders can't actually do that. So do you think trading is for everyone? Like, do you think it's something that you would want to teach your own kids?
Hmm. I think yes. I think that um, I think trading is part of like a group of activities. I've already included poker into this group of activity, but you learn a lot about yourself. I think humility is definitely something that you have to employ. You have to be separating the emotional part of, your decision making, the part that fears loss, um, and the part of you that celebrates wins and success, because those are all things that are feeding this emotional train. And if you are doing it for the thrill and or reacting to the fear, um, then you're not really doing it to win, you're doing it to enjoy yourself. Kind of like people that say gamble at poker versus people that consistently grind and win at poker. And this is why you'll always have markets where there's some people that are more than happy to give up their money into the market. And then there's these patient grinders that are happy to slowly extract that wealth out of the market. That's kind of what we're seeing. And it's not rocket science at all by any means, but it does require a lot of an individual to do that. And not a lot of people can. And if you can do it, um, because I think it could be a learnable skill. I think there is something innately learnable about it. Some people might naturally be good or better at it to start, but no one, is born with the type of brain I think that does this naturally. I think that we get, an education in it and it's reinforced and we become better at it. And so, I do think that anybody can learn to do it with enough time, but for some people that could be a very, very long time. And for some people, they could get it down in a few years, because of just naturally who they are. So, yeah, I would love to teach my kids these types of things because they'll make them incredibly good at games and strategy and good at, separating themselves when it's appropriate emotionally from outcomes and things like that. Those are good skills to have, that teaches a person resilience, and I believe if you talk to like mental health people, one of the greatest predictors of whether or not somebody is successful in adulthood is their resilience, their emotional resilience, your ability to keep coming back, and being honest with yourself and taking the emotional hits and kind of letting it fall off your shoulder.
Yeah. So is that your plan for the future also, to keep, do you regard trading as a game? Have you gamified it in your mind, or is it like a side hustle, a side business, something that you're pursuing seriously and not just something you're trying out?
It's it is both to me. But so just so you know, for context, I also sometimes take on the perspective that everything in life is a game of some kind. That life itself is a game in which you get to choose your own winning conditions. And it's not just a game, but it's games within games, games overlapping. Like, for example, if you are amongst friends, right? And you guys decide that you're going to have a conversation, is it really about expressing every single thing you want to say, or is it about making everyone feel like they're heard, right? Is it creating those friendships and bonds? That's really the game you want to be playing, right? Or if you find some friend that you find attractive or cute and you're playing a game with them, is it really to win or is it really to flirt? No matter what, we're all playing a game at any given time or a game within a game, and you just have to figure out what do I really want to play, get out of this, what's winning look like to me, because it may not be the obvious thing, right? So playing in markets, you are playing and it is a game, and you do win and you do lose, you know.
And how does winning look like for you in terms of your accounts? Like, is a payout a win, or do you take out much more than that?
I would say consistently being able to extract wealth from the market is probably the most objective way to gauge winning, because even if you are, practicing bad habits as a trader and you are getting emotional, and you might be adjusting your stop loss and take profit and taking huge swings, you could still have moments of winning, and you might win big, but then next week you might blow accounts and not have anything to show for it, so it can't just be taking money out of the market, it's consistently taking money out of the market. I would much rather take a few $1,000s of wealth consistently than swing big and take 10, 15 grand one month, and then like nothing for 6 months or something like that.
Is your plan to scale up your accounts, or would you put a cap to yourself? Like, this is how much capital I'm able to control, and this is how much I'm shooting for.
I don't I don't take it off the table, scaling. I think right now stacking makes sense because I'm able to isolate accounts with ideas, right? And I like saying, I'm going to trade this idea or this, I mean, this account, for example, my funded account is an old account that I've had for a long time, but it's because it has that 25% consistency rule. It's like, so
Okay.
that account, that account I trade a certain way because that's that account, right? I feel like, as I mature as a trader even more, there might be an experiment, because they're kind of like all experiments. There's an experiment where maybe I don't cash this account out. Maybe I build it and then try to get the scale up to increase the capital of that account and keep trading it. And I'll see how that goes. But in that scenario, I'm kind of changing gears and I'm losing some of the benefits of challenge accounts, and is that, hey, with all having multiple challenge accounts, I can set an idea, I can set a trade up, and then I can walk away. That's a really cool thing to do. And that's a great way to build that discipline. Now with one scaled $1 million account, I can't do that anymore. I have to set my trade and I have to look at it. And I have to look at it and I have to sit on my hands and not touch it, right? Now I'm really
You'd have
asking
to
myself,
evolve to a different person. Up until that point, you would have to be somebody else with some
I'd have
different
to be a
skills and some
better
different
trader.
mindset. Yeah.
Yeah, I'd have to be a different person. I'd have to be the next evolution of this progression of being a trader. I'd have to be somebody that really would be like an institutional trader that gets paid a lot of money to sit in an office and manage $1 million account and make it profitable. And if I can do that, I'd basically, there'd be no difference between me as a retail. I wouldn't be a retail trader anymore. I'd be a professional trader at that moment.
Okay. So maybe someday you will have that one master account with all of the currencies that you're trading. Might
Maybe.
not be that far fetched. Like, all the considering you have the data for many pairs, maybe there are some pairs that you just would drop because of their performance, and then
Yeah,
at the end you would have 3 pairs, and then that would be your master account. Sounds like
maybe.
the most logical conclusion, right?
Maybe. And here's another thing too, is I still have to be grabbing new accounts to try the currency pairs that I've dropped because it's constantly changing. Like, right now I'm not in any gold, right? That's not a forever thing. That's a now thing. And eventually
Yeah.
I'm going to look at gold again and I'm be like, okay, there's some stability that has returned that I feel like I recognize setups. I can see a setup, here. I'm gonna do that again. And so there is that aspect of it too, is I have to still grab new accounts that are not like a scaled up $1 million account that I'm going to, try certain things out on, but I'll try them out on a smaller account or on a new account and be like, ooh, gold is good again, or in USDJPY, no, not good anymore, something like that.
That's a very calculated approach. Like that's super engineered. I would like to say that's a super engineer way of looking at trading.